Hello friends, welcome to yet another market video. I will be analyzing the Nifty chart in today's video once again. Now friends, I have been mentioning that 17,400 is a good support for Nifty. And now let's look at this daily chart of Nifty that I have on the screen. You see on the 30th of Jan on Monday, Nifty made a low of 17,405. On the budget day, that is on Wednesday, 1st of February, Nifty made a low of 17,353. On the 2nd of Feb, that is on Thursday when we had the weekly expiry, Nifty made a low of 17,445. So now on three occasions in the last week, Nifty has, or rather in this week, Nifty has gone to the 17,400 levels approximately, and on each occasion it has bounced back from there. As I had mentioned in my previous video that 17,400 is a good support for Nifty and it is unlikely to crack easily. You see on this chart I have this red dotted line which shows the importance of this level of 17,400. You see, in the past, on quite a few occasions, Nifty has held 17,400 as a support. Here in October, here in the month of August, here in the month of September. So this 17,400 is a solid support for Nifty, and I do not expect it to be broken easily. Now, given the fact that the budget was actually a good budget and received well by the market, I think 17,400 is probably the bottom for the short term. The market is unlikely to break this level in a hurry. Now, let's take a look at a few other technical parameters. Now, first, the 200-day moving average. Now, currently, the 200-day moving average is placed at around 17,297. So, Nifty has dipped to 17,400 odd levels in this week, but the 200-day moving average is still below 17,400, and since Nifty has actually rallied smartly from 17,400 odd levels, each time it has dipped there. I think this 200-day moving average is going to act as a support on any down move, even if we break 17,400. Now let's take a look at the Bollinger Bands. Now I am drawing the Bollinger Bands with the 2 and 3 standard deviations. Now let's look at the Bollinger Band with the 2 standard deviation. Now I had mentioned in my last video that once Nifty touches the -2 standard deviation level on the Bollinger Band, it has a tendency to drift lower, and this is precisely what played out yet again. We hit the -2 standard deviation level on 27th of Jan, and Nifty has continued to drift lower for the next few trading sessions until, in fact, 2nd of Feb, that is on Thursday. Now on Friday session, Nifty actually gave a nice boost to the bulls and we rallied some 243 points. Now currently Nifty is now touching the 20-day moving average. Oh, here, as you can see, the 20-day moving average is currently placed at 17897 and Nifty has closed at 17854 levels on Friday. Now, what probably can happen going ahead is that this budget day high of 17,972, I think Nifty is likely to probably test this level yet again. Now, this we will know only in the coming week if it actually does. For the moment, I think Nifty is range bound between 17,400 on the downside and now roughly 18,250 levels on the upside. This is the broad range that I see Nifty trading in. Now, keep in mind that this trend line resistance, okay, which you can see on this chart, I have drawn this trend line connecting the 1st December high with the 14 December high. I have extended this trend line on the downside. You see, this trend line has actually acted as a resistance in the past. Now, see over here, some 4 trading sessions, the bulls have actually not managed to close above this trend line after going close to it. And in fact, on the 24th of Jan, we broke below this trend line marginally, and then the follow-up down move actually happened. So again, this trend line, which currently is placed around 17,800, 18,000 odd levels. This may once again act as a resistance, but for the moment, we really have to simply see how the things pan out if and when Nifty actually reaches those levels. I think the budget day high is likely to be tested in the coming week. So 17,950 odd levels may come next week. For the moment, the downside looks to me to be capped at 17,400 odd levels. I do not think shorting this market right now is a good idea. Now, keep in mind that the Adani stocks have taken a severe bashing on the back of the Hindenburg research report that has been released last 10 odd days. So the market actually has probably now digested a great part of the impact of this report, because the Adani stocks, you have seen that in terms of market cap, a sizable chunk has already been wiped out, and the negative sentiment that this research report had created has probably run its course. I'm using the term probably. We still do not know how things pan out going ahead, but given the massive down move that has already happened in the Adani Group stocks and the negative sentiment that has already been witnessed because of this research report, I do not see any great down move that will now follow up. So, friend, this is my analysis of Nifty. I think the market looks to me to be range bound between 17,400 odd on the downside and 18,250 roughly on the upside. The most important level to watch out on the upside now is 17,950 odd, which is roughly the budget day's high. So friends, this was my analysis on Nifty. Do share your comments. I wish you good luck. Until next time, cheers.